Hey everybody, this is David Skrika. So we're just going to do a quick update here. I've got my kind of beach video I did yesterday. I got to run around. Sorry for the lack of update. So yeah, basically just quickly to start, I talked about this in the beach update. June 22nd will now be the day. Definitely we will launch. You'll see a bunch of videos now. I've had a bit of a night, you have to bear with me. Like living on the island sometimes it's not like living in a first world country or living, in a big city. I have three cars. I have a Nissan Cabriolet. It's like a Murano that's convertible, which is like my most reliable car at the moment. And then I have this old Mazda Miata that I needed a new head gasket for. And then I have a Mini Cooper, which has been a nightmare ever since I got it. I think it was, first of all, not the car that was supposed to come from Singapore. And second of all, it was a racing car in Singapore, and I've had a million problems with it. Right now it's just ripping through fan belts. So anyhow, long story short, I had a problem with my radiator in my one car that is working right now, the Nissan. So I had to take care of that. Plus here I live off a water tank, and my pump burnt out the other day. And I got 8-9 years out of the pump, and considering the salt and sand and spray and everything that destroys, wind, rain, that destroys everything here, 9 years is very good, but it means I had to get a new pump and run around and get the new fittings. And I even got to run around and get one more part for it to install it today. So I really, I apologize. Sometimes and stuff goes bad on the island. You got to run around. You got to look for the different stores that have the different things. So anyhow, we'll get that done today, and I'll get that done, and then we'll be doing a lot more videos. So anyhow, what I want to show you is yesterday we saw this huge decline in the markets. We're down about 200 today on the Dow, and the Nasdaq is up flat. The Nasdaq is gone down quite a bit, right? So we're definitely in bear market range. I think we hit it in the S&P. We're down like 30% from the highs on the Nasdaq. So this is, to me, the most key market right now. This is the 2-year Treasury, which has now gone to 340. Now, within 25 to 50 basis points, almost every rate hike cycle going back, I'm going to go back to 1990 on this just to show you this, okay? The 2-year Treasury has predicted where rates have gone. You can see in 94, it went to almost 8%. And then in 99, 2000, it went to about 6.5%, 7%. Then in 03, 04, I'm actually going to take the log scale off so we can see it better, because the problem is when it went to almost zero. In 03, 04, we can see, or 04, 05, we can see it went to about 5%. And then we can see that, in the last rate hike cycle, it went to like 3%. And so almost every single time, it's gone within, 0.5%. So like back here in 2000, I think the Fed funds went to 6.5. You can see this went to 7. It went to like 5. You can see it just went over 5 in 2006. And then it went to 2.5 in the last cycle, and this went to 3. So now actually what's interesting is notice this downtrend too, where the lower lows and lower highs in interest rates. We now have taken that out. This is the first time, actually, if we went back actually to the early 80s, this would be almost like the first time in history that now we have taken this out I don't know why this is only going to April. Let's get it to go to now. But anyhow, this is the first time you can see it. We've kind of had this higher high. Every single short-term rates have been trending lower, for over 40 years. And I think this is the start. Now, this doesn't mean just like they trended lower choppily, they'll probably trend higher choppily. So maybe we'll go to 4 on this cycle, then down to 2, and then blah, blah, blah. But we're definitely now seeing this new trend. So this is really important, because at 340, we're talking that the Fed funds rate will probably go to 3 or 0.75%. So that's really key. And I think the market now, we're looking at a 75 basis point on Wednesday rate hike, and that's really key for the market. So I just wanted to show you this chart. This is going to be a quicker video because I just want to talk about that. I talk about markets. So we can see too, the S&P broke down here. We were down another 0.5% today. Maybe we'll have a relief rally on the Fed. I don't know, but we definitely now have broke these lows of May, and we're trending lower. And I think at some point the break is going to be bigger. Since the beginning of the year, when this bear market started, we've seen these kind of rallies and up and down and up and down. I think we're going to see a bigger break where like the market breaks more than 10 or 15% and then bounces. I think at some point at the end, you can see the market down just 15 or 20% in a few weeks, and that will be the end. Probably the key will be the VIX needs to go to 33. The VIX here, you can see, I think the VIX needs to bust out and do something like it did in 2020. Go to like that 60, 70 range. You can see it did that in 2018 here. Go to that 50 range, do something like that before we see a significant bottom and rally in the stock market. So I'm doing a few changes of positions today, which you'll see in the email. I'm re-entering our home capital group short. I think with the higher rates, I've heard all these disaster stories of Canada. Prices are down 30, 40% in some of the hot areas of Ontario. So obviously this is going to have a huge amount of problems. And we can see at the 018 bottom, this was a $12 stock, went about there during the 2020 bottom. So I think, yeah, I think is going to go back to $12. And so I'm buying the September 26s and the January 23 to 2023 22s. And what that does is that gives us two earnings reports, the August and the November earnings report for the Januaries, and then at least one earnings report. I think this next earnings report should be really the disaster one. So I think that's, when this thing should have a lot of problems. And we're going to look at here. You can see here, and then we can see there was this breakdown. This is when they had a criminal, almost like a fraud type problem. So, but I definitely think those 2018 levels and 2019 levels, 12, 13 are definitely possible. Which, by the way, these puts are only like about $1 on the 22s and like $1.30 on the 26s. So if each were to happen, just for roughly say this were go to 12, those dollar puts should be about 10, and the $26 put should be about 14, 15. So each of them could go up, basically 10 times in value. So I'm buying 15 of each. And then with NVDA, I'm going to do a little trade, a thing here in the trade. In NVIDIA, we're going to do, I have the 130s, which have done really well, the September 130s. I'm going to sell 3 of them. We have 8, and then I'm going to roll them into 25 90s. I always like, because I think at some point NVIDIA is going to blow up because of the parabolic nature. Now, of course, the crypto mining aspect of their business has got to be killed now with Bitcoin. We'll talk about Bitcoin quickly before this video ends. But again, I'm kind of looking at that 2018 high or pre-high of 70 to 80 as kind of my price target. Definitely the next target is this 125 area, which was just low on a kind of consolidation in 2020, but definitely 125 and then 80. So, and I don't mind it with NVIDIA because I think it's just going to blow up at some point going forward. So, anyhow, so with Bitcoin, we can see here, totally the bubble has burst now. Now, even if you're a long-term bull in Bitcoin, like, look, it hit over $1,100 in 2013 and then went to like 200 in 2015 and didn't really start going up again until about 2016, 2017, okay, about 2016. But really, it was like a 3-year consolidation where Bitcoin stayed well 50% low of that high. And then the same thing in the 2017, 2018 top. Bitcoin basically went sideways for 2.5 years until mid 2020 and stayed for the most part 50% below the high. So even if you're the biggest bull in Bitcoin, after this top, which was November of last year, you're probably going to go sideways, and we're at a higher level, and probably you're going to go at a low 10 to 15,000. This is like saying this thing goes up longer term. I don't know if it is, because all the frauds, all the scams we're seeing in the crypto community, I think this is really going to really hit it harder than those last bear markets, the amount of public participation there was in it. So, but even if you're the biggest bull, biggest bull in the world, you'd have to see this big consolidation here for years and years, like the last 2 consolidations. So there's really no hurry to buy. You just have to start seeing that basing out, even if you're the biggest of bulls. Obviously, I think anyone knows me, I'm not a Bitcoin bull. And of course, the kind of poster boy stock for this is MicroStrategy, where the guy kind of like, he borrowed money to buy Bitcoin. He got a big premium when it went up, and now he's getting a discount. But you can see the stock, the bubble's basically burst. Like MicroStrategy is actually now below where it was in 2016, 2017, before this guy, Michael Saylor, had anything to do with Bitcoin. So he's just basically, what's interesting about this is that, history rhymes, as they say. We go back to the .com bubble. And you can see the huge spike this had. This was like one of the first stocks that blew up. And it's kind of, 22 years later, it's kind of like one of the first stocks blowing up during this bubble. So anyhow, I'm just going to leave it at that. So the Bitcoin price going down, we're doing a little shift in the NVDA trade, and we're also doing adding to the HCG books. Now, I don't know what's going to happen, but the HCG, I'm not really we're right at the lows and we could break them here. So I'm not going to sit here and worry about if this thing bounces at 28, 29. You can always add more if it does. But I just think that we're in, with what rates are doing, with what Canadian real estate is doing, I think this is in some really bad, going to be in a really bad situation. So I'm just willing to buy it here. And the nice thing about that Canadian option market, because it's not as liquid, you don't have a lot of implied volatility. There's not a lot of premium. So you're not buying this with a huge amount of premium.